Hi guys, we've made it. It's Friday, and this is the weekly wrap up delivered to you by Trade Out Loud. And let's take a look at the overall market and see how the trading performed throughout this week, and actually how we closed the week and what we can expect for the following week. Now, before we even start going into analysis, today we had a bullish day that triggered very sharply off the open, and we're having a sell through, which is perfectly normal, taking into consideration that there's profit taking ahead of the weekend. And not only that, but we might see extreme whippiness going into Monday and Tuesday, because on Wednesday we have the FOMC meeting, and we will see if we're going to get a rate hike or not. So far, the numbers that came in this morning and the pop up this morning came in on new numbers. The NFP report suggested that the good NFP report that came out today suggested that we might get a rate hike based on those particular numbers. But before going into fundamental details, let's take a look at the charts, and let's take a look at our technical analysis and to see what's going on and what we can expect for the following week. So first off, let's start with this week. This week was a very sideways week. We haven't had a lot of trades. We're positive for the week, so that is a good point for us. You could see right here on the daily chart that we had a very close range with support that is pretty much was respected at 53.32, and with resistance at 53.70, 70, 77, 75 area, which was our main focus for throughout the week. Remember, multiple target levels were set at that particular area. Also, today we've triggered a daily buy. We've also started to trade on a new contract that took the price higher into the 5400 area. Remember that every single time we are starting a new contract, and when the majority of trading is shifted into the new contract, we should expect some kind of whippiness that develops, especially in the morning hours, and the calibration produces throughout the day. Moving into next week, we can expect that if we trade above and technically over 5400 is going to be once again a target. Remember, today by 1 point we did not reach the high of 5400, which is the all-time high for NASDAQ E-mini. If we break above the 1400 level, we do have projected targets for the upside that can continue into 5430, 5475, and 54.85. We're going to see how the market will react based on whether or not we're going to get a rate hike. Remember, we're not going to trade the news, and remember that news is only a brief interruption in the trend of an asset. So moving forward, we're still on plenty of support right here. We're uptrending on all the time frames. We're still very strong. You can see that the moving averages are fanning out. It means that we're having a very strong trend in place, and the trend might have odds of continuation, although we are extended on the monthly chart. On the weekly chart, we're looking to catch up a little bit on the daily chart, and as long as we develop this shelf and we don't tackle this shelf of support at 33 area, 32 area, we can have a sustainable move for the upside, because even if this range has been rather sloppy, and you could see that by the multiple bottoming tails and topping tails that have developed throughout this week's trading session. But if we break above these highs into this location over 75, the area that we have discussed, we have the possibility of continuing higher. If we break below, let's say if the market is going to interpret a rate hike in a negative manner, we can get a break below 53.25, then we can set a steeper correction back into the 5300 and even into the 5200 without being bearish overall on the general trend. We will be bearish obviously on our intraday trading, but cautiously bearish because we're still going to hit support level after support level on major time frame charts. So for NQ, we still have room to continue higher. Remember, this is a very strong support area when we're looking at an hourly chart. This is a minor support area right here in between 70 and 80. This is a cushion area, and a bounce over 80 can send the price back into the 5400 level. Now let's take a look at YM, and this is the E-mini Dow. Throughout this week, it had the steeper acceleration to the downside, residing now very closely and correcting very closely to a support area at 20,790. This is the new support area that has developed yesterday. So far, yesterday's low is holding. We have a double bottom situation here. We had an accelerated move to the downside compared to all the other indices. E-mini Dow was one of the weakest ones right off the bat this morning, and this is the reason why I prefer to go long NASDAQ, because it was the one that was stronger at the beginning of the trading session today. I think that if we break 20,930, then we can speak of more of an upside, and actually we can speak next week if we break this level for a continuation back into the 21,100, 150, 162 level, which is this all-time high here. I think that the longer we stay in this area, and if the 20,800 level is going to hold, we can actually move higher. However, based on the weekly chart and the information that we have on the weekly chart, and based on the new formation that we had last week, and the sell that we had following the climactic run into this all-time high 21,162, a break of 20,750, and remember, we're very close to that area. That is a strong area of support, but if we breach that area, we can come in even more and stronger all the way to 20,100 level, 20,100 and change. That's going to be the area for the possible correction that can happen in the following weeks. So we're going to see if that happens or not. Anyways, we have to play it one day at a time. Being day traders, we don't have to look for holding positions for longer periods of times. However, if we will close the day around 20,800 area, the information that we're going to get Sunday night when the session opens at 6 p.m. Eastern time throughout Monday's trading session. And obviously, I'm not going to initiate any swing trades ahead of FOMC, but I will evaluate this level, 20,800, even a steeper pullback into 20,750 for a potential swing trade. We haven't had swing trades in a very long time because the market was not promoting swing trades, but I will be looking for swing trades moving forward as well. Now, let's take a look at the S&P 500 A-mini. And the S&P 500 has the same pullback into a prior area of support right here. What we can see that it has a little bit of weakness into the throughout. It had a little bit of weakness throughout the week in the sense that it triggered a weekly sell, and that could possibly put it in a weaker environment other than other than the other indices YM and NQ, so it can be on the weaker side. So this is going to be a critical area. If we break 2350, we can actually come in a little steeper all the way to 2321 and 2300 areas, the area that a pullback would be expected. So if we're going to start a sell-off, and please keep in mind that we're going to have that interruption with the FOMC meeting, so there's no way of knowing ahead of time what will happen, but we will trade little by little, one day at a time, because we're day traders. But for swing trade purpose, we have to wait until after FOMC. Projected targets for the S&P 500 moving higher. If we break today's high, we can actually move higher into the 2400 area back again, and we do have a tradable void that can sustain that move back to the upside. So with that being said, we're going to be looking long for the week in that case. Let's take a look at Russell because we're analyzing the market. The Russell is the one that came in a lot throughout the daily chart. We saw that it had a very hard time for a lot of trading sessions, and actually since December it had a very, very hard trading session, very hard pattern. I'm going to readjust it here so you can see that since it has established a high on December 9th, it has been sideways until the break above the range on February 13th, where it had established another shelf of support, 1390, created a new all-time high, 1415, and then it came back into the bottom of the range. So it erased all this move to the upside that happened at the beginning of February. So right now, bullish environment. Obviously, the bottoms of the bases are good areas to buy and to get in trades, especially that we're into a very, very strong support area here and psychological area at 1350. But other than that, this is a double sword type of trade because a break below 1350 can send the price back into the 1300, and a turnaround in this location can send the price back up to 1400. So it's a very, very tricky situation. More about Russell. I'm going to post a video on Monday before the market open to better evaluate what will happen off that open. We will have a little bit of more information on the start of the trading session, obviously on Friday, but don't expect a lot of follow through, especially on Monday and Tuesday. Sunday night, I think is going to be a very difficult time to trade. Other than that, Monday and Tuesday are going to be scalp days. Be ready for that, in and outs. And other than that, we will wait until after FOMC. More precisely, I usually don't trade FOMC meetings, so I usually don't trade even the morning of the FOMC meeting. However, we will look at the market. If a trade should set up, we will trade, but if not, we won't take a trade on that FOMC meeting. Okay, so that's called capital preservation. Let's take a look at gold and oil, and these are the last two that we're going to analyze throughout the day today. We spoke about gold this morning, and we mentioned the fact that this might be a turnaround for gold. It has hit, and 1200 is the support area for it. If we're going to get a bounce over 1205, which actually was tested throughout the day today, right at the beginning of the New York session, we might get a continuation higher into the 1220 area, and this is going to be the target area, first target area for a possible swing long. I won't initiate a swing just yet, just taking into consideration the FOMC meeting that is upcoming on Wednesday. But with that in mind, I would look for possible day trades with this information in mind for the beginning of the week going into FOMC. So I think it's going to be very, very tricky. This area as well can form right here at 1210. This area can also mean a turnaround to the downside. So this is a very, very tricky area in gold as well. So like I said, very short targets. We have to measure twice before taking the trade. The risk to reward, it's going to be quite difficult. Let's take a look at oil. Oil had a substantial run to the downside in the last 3 trading sessions, and a breakdown that occurred in this trading session. However, the risk to reward was really, really not good, and was not appropriate to take a trade short at this point, even for scalping. 1 hour trade right here on this breakdown. However, like I've mentioned, the risk for this trade was just very, very great, was really large. It is, and I'm going to try to make this chart a little smaller so you can see the price action. So we did have a move higher since November. We stabilized in price for a very long time and this is pretty much the pattern that we had in the Russell as well. So you can see here the price resistance that developed at 54.50. a price resistance, and then we had support 52. So we kind of bounced back and forth within this range until we had the first confirmation of the breakdown at 52.50 that came into 51.50 and then continued lower. We're sitting right now on the 200 moving average. This is a place that not only a place of support from the moving average, but we have support from this prior high, which is a minor support area, and we may get a turnaround in this area right here at, I would say, 48.80 or so, over $49. So between these ranges that we have just established, 48 and 49.80 or so, these are going to be the ranges. These are going to be represent the tradable ranges for today going into Monday. But like I said, I wouldn't be shorting here aggressively. Again, this is a strong area of support. We might hold this area and we might see a turnaround in this area. If we consolidate weekly into very, very weakly into this area, and so far we have a very weak price action. We also have the decline in volume, not a lot of interest moving into the end of the trading week, but you could see that the more we stay in this area, the more we have odds of continuing lower back into the bottom of this support level at $45. All right, this is all for today. Thank you so much for joining. I hope you all have a profitable trading week. I hope you all are staying on the right side of the trade, and I'll see you guys next Monday with a pre-market game plan for the following week, for the day, for Monday, and for the following week. Thanks for joining, and have a safe and happy weekend.